Good afternoon and welcome to the ASEAN Midday Market Watch. Our guest today is market strategist Kelvin Wong, who's the market strategist at CMC Markets. Now, Kelvin, thanks for coming in.
Sure. Good afternoon, Brian. Yeah.
Now, before we get your insights, Kelvin, let's take a look at how markets in the region are performing. And we will start with the SGX, which is at 2,106.34. It's up 0.86%. Bursa Malaysia is at 1,629.42. It's down 0.63%. Now, looking across the region, we've got the Nikkei, which is up 0.44% at 29,164.35. The Shanghai Composite is up a whopping 1.78% at 2,417.63. The Hang Seng is also up sharply 1.6% at 29,371.23. The ASX 200, however, bucks the trend at down 0.15% at 6,704.30. And rounding up the regional exchanges, we've got the Kospi, which is up 2.09% at 3,019.30. Kelvin, what's your view on how markets have performed this morning?
Well, if you look at on the average on the Asia broad-based stock market perspective, I would say that it's a kind of a very positive risk-on ripple effect, and especially we're still talking about this cyclicals and value outperformance. So it could be seen very clearly on the Singapore Straits Times Index. So if you look at the Straits Times Index, it has been outperforming its regional peers since the middle, I would say that towards the third week of February, and in fact also outperformed the broader-based US major stock indices. So one of the reasons why the local Singapore STI has been outperforming is due to its heavy weightage on the top three local banks, namely DBS, UOB, OCBC. The combined weightage, I would say, is close to 30% of the STI. So given that it's a kind of cyclical play that we are expecting to see in the next 1 to 3 months ahead, so that's why that gives the reason why the STI is actually seeing this kind of potential inflows flowing into the Singapore stock market at this point in time.
Now, globally, do you see this recovery in the tech and growth stocks continuing, or will that be more a move towards cyclicals once again?
Well, of course, we got to be very concerned about the 10-year long-dated treasury yield. So if we look at the US 10-year as a benchmark, so if you look at the start of this week, the US 10-year has started to come down from this 1.60%, 1.6%. So yesterday is off by another 3 to 4 basis points again. Now, yesterday trading about close about 1.54%. So as long as we see a bit of consolidation below 1.6%, we will start to see a kind of clarity on this ongoing tech sell-off. So one of the key support I'm watching will be the Nasdaq 100, because Nasdaq 100 is the benchmark for tech stocks at this 12,180 level. So if you could start to see a kind of a sideways movement at this 12,180 level, I was still expecting more outperformance going forward for cyclicals and value, because if we're talking about the next 1 to 3 months, inflationary expectations are still expected to go up due to this, we call it this easing off of measures from the last 12 months of pandemic crisis. We also start to see more countries rolling out this vaccination program as well. So that all that will actually benefit cyclical pace. On top of that, definitely we cannot keep on seeing tech stocks being sell off at this current pace. We're talking about the pace that was seen last 2 weeks ago, because all markets actually move hand in hand.
Now, looking at currency markets, can the reason the US dollar gains be sustained, and how will this potentially impact ASEAN currencies moving forward?
Okay, because if I were to look at the dollar as per se, because if you look at the US dollar in the last 1 to 2 weeks, it has been rallying due to this yield differential story rather than a kind of an increase in budget deficit. Because if we talk about the last maybe 1 to 3 months, the US dollar kind of getting more weak is actually due to this their increased budget deficit concern. But like we discussed earlier on the US Treasury yield, of course, I'm expecting this 1.6% resistance to actually hold further upside potential. So from now, we may see a bit of sideways movement on the US Treasury yield. So that could actually ease off Asian currency performance against the dollar. So if you look at the dollar yen, or one example of the dollar yen is the dollar yen has been coming down slightly. I'll say that the recent rally has been capped by this 109.30, 109.65 major resistance. So that is a kind of a good sign for Asian currency. And also you look at the dollar CNH, the offshore yen, is now back at this back down slightly below its range resistance that was capping this dollar yen about 3 months ago, which is at this 5.51 level. So with that, right, a kind of a muted dollar strength going forward, we could actually expecting Asia stocks to actually inch up higher from here.
Okay, and markets tonight are looking, markets are looking towards tonight's ECB policy meeting later. Now, what are the key points are you watching out for?
Okay, so for ECB, right, most market watchers will be concerned about, number one, the ongoing ECB bond buying program. They call it the Pandemic Emergency Purchase Program, PEEP in short. So the last meeting in December, they extended the program till March 2022 and even expanded its bonds purchase to 1.85 trillion. So market will be watching whether any guidance will be given that is there a possibility for them to actually extend beyond March 2022 and even expand the size of a bond purchase program. Because if you look at the last 2 weeks or so, their weekly repurchase program has been kind of slightly low. In fact, below the 18 billion euro dollar on average that was seen in the last 12 months. So one of the reasons over here is that because market participants are concerned about the rising European bond yields. We're talking about the bond yields has been rising steadily as well, the 10-year yield. So market watchers will be looking at this, whether ECB central banker, the governor doing a press conference, will she sound any alarm about this rising bond yields? And also another sign to watch out will be in this coming meeting tonight, ECB will actually give a new, we call it economic forecast. So just a quick recap, previous forecast in December for GDP growth will be coming at 3.9% in 2021 this year, 2022 will be 4.2%, and headline inflation will be at this 1% in 2021, 1.1% in 2022. So given the increase in let's say oil prices in the last 1 to 2 months or so, it's very interesting to see how does this growth as well growth projection and CP headline inflation projection plays out in this coming meeting. So any signs of I'll say that an increase in growth or an increase in inflation forecast that could actually give a bit of we call it a comforting sign for euro dollar, because you look at the euro dollar has been coming off pretty sharply in the last 4 weeks or so. In fact, from the January high, it's about drop of 500 basis points. So in fact, right now, technically the euro dollar is coming very close to a key medium-term support at 1.1810, okay, which is also the 200-day exponential moving average. So any potential sign of a further rebound from this level could actually start to see another leg of bullish impulsive move. We're talking about multi-week to multi-month for the euro dollar.
Kelvin, thank you very much for coming in and for your insights.
Sure, thank you, Brian. Yeah.
Now, we've been speaking to Kelvin Wong, market strategist at CMC Markets, on BizTech's ASEAN Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology conversations.